Good afternoon. This is Tom Aspray with the Viper Report. It's Friday, July 16th, about an hour and 20 minutes before the close. In last weekend's contribution to Forbes.com, the title of my piece was, "Is the stock market risk increasing?" Many have been thinking that for a couple of months, and I've actually been quite bullish since early June, but things have changed in the past couple of weeks. Here's what I was looking at. One chart I focused on in this piece was the weekly action of some of the market internals. We have the New York Composite on a weekly basis. It hadn't made a high for a few weeks, but was holding up very nicely. Below here in green, we have the NYSE All AD line. That encompasses everything in the NYSE index. I made a marginal new high in the last couple of weeks. Volume has been tailing off. It's been really strong. Made a sharp new high in early June, which was a great buying opportunity. Now it seems to be losing upside momentum, or it did as of the close on Friday the 9th. More concerning to me was the NYSE stocks only AD line. You can see it had formed lower highs here, this line D. So no new high in price, so it's not really what technicians would call a bearish divergence, but it is a sign of deterioration, and we're watching this low here from June as a break below that low would suggest, okay, the AD line is in a downtrend. You notice a similar situation was seen in early 2020, sharply lower highs here, and then of course the AD line led the market sharply lower into the March lows. In the article, I focused on the daily analysis also. You can see a key support level here. Daily AD line shows even further weakness. We broke an uptrend here in June. That's often an early warning sign. The number of new highs, that's a sign of the internal strength, has been deteriorating, hasn't really given a bearish sign. To do that, you would have to see the number of new lows probably surge above 100. We got up to 63 on that Thursday decline, which, based on the AD numbers, that sharp down day was a short-term buying opportunity, but the power from that selling, I think, has dissipated right now. As you can see, as we head into the last hour, the stock market's kind of having a rough time on Friday. Dow is down 252, NASDAQ Composite down 80, S&P down 26 points. Russell down 15 points, pretty much negative across the board. At this point in time, there are 1,162 stocks up and 2,100 down. More new highs and new lows, so we won't reach that 100 new lows today anyway, but that'll be something to watch out for in the week ahead. I gave a presentation on Thursday for the Wealth 365 group. And discussing a concept called weight of the evidence, and it was very well attended and lots of good questions, and I hope some of you were able to tune in. In that, I looked at some of the measures that I use to analyze the market risk, and as you might have expected, they were showing that the risk was fairly high. I also updated my analysis from the weekend article. Pointed out this NASDAQ 100 chart is as of Tuesday's close that we pushed above this red line, which is the monthly R1 resistance level, closed lower, and the selling has continued. Right now, the QQQ is down about 0.6% for the week. In fact, the QQQ is currently trading around 358, quite a ways below that monthly pivot resistance. More importantly, the NASDAQ 100 AD line, as I pointed out to clients in the Wednesday's reports, has formed a negative divergence, this line B. Higher highs in price, lower highs in the AD line. So if we get a break below that, that's the start of a more meaningful correction than we've seen so far. The thrust of my Wealth 365 presentation was you have to understand corrections, how to recognize them, and how to deal with them. And I advise people that, and I have been for a week or two, that you really want to lower your equity exposure if you're a trader going into a correction. That gives you the powder when the market turns, which it eventually will. This is going to be another buying opportunity. I don't see any change in the intermediate trend at this point. So it should be a great buying opportunity in the next, several weeks, or, probably by September. I will be doing a follow-up presentation on the way to the evidence in the next couple of weeks. And you can sign up with this, and we'll send you an invitation and a password. And also in the Wealth 365, I had a special offer for investors and traders. $199 gets you a 90-minute training session with me, just one-on-one. It's a Zoom session. You can sign up through PayPal. The link here is at the bottom of the page. And once you sign up, my office will contact you. I'll give you a call. We'll discuss your trading, discuss how I can help you. If you decide I can't help you, or if I decide I can't help you, money back guarantee, no problem. So pretty unique offer. A lot of my traders have been very successful, and hope you'll consider it. Well, have a great weekend, and hope you find this discussion beneficial. Thanks.